Good afternoon, everybody. How are you all doing today? It's now February the 14th. It's about 5:30 p.m. Central Standard Time here in Manitoba, Canada. And the first coin that we'll be looking at today will be Ethereum. As you guys know, Ethereum holds a very dear spot to me in my heart. And because of this volatility and new adoption that we're seeing, it's certainly worth our time. Let's take a look first of all at the 24-hour market cap, or 24-hour volume rather. I do have to admit that Ethereum is a very tough tough nut to crack, and the Elliott Wave count has been tremendously more difficult than normal. But I do believe that I have an alternate count and also a main count that I will be sharing with you today. Let's go to historical data first of all and see where the Bitcoin dominance is. Bitcoin dominance has dropped from roughly 66% to roughly 61.1%, which is a 4.9% drop in about a week. Therefore, we can easily say that the shift of capital is now going to altcoins. Bitcoin seems to be stagnant around this resistance of $10,450. Just watching the fire behind me. Last thing that I want is for it to just explode all over the floor and get near the carpet and burn it. So we see the 24-hour volume right now for Ethereum still steadily above the $20 billion range. For the past few weeks, we've been seeing it well under $17 billion, even as low as $11 to $12 billion earlier in the month. But now we're seeing an average of over $23 billion a day, which is a lot of volume. We're seeing tons of coins right now that are just skyrocketing. Let's take a look at some of these coins that have gained a lot of ground. Bitcoin hasn't done much whatsoever. We see BSV, Bitcoin Cash, they actually spiked up quite generously. Just Bitcoin Cash. Litecoin is alright. We're seeing Tezos double-digit gain today. We're seeing Tron double-digit gain. I think Neo was a double-digit gain as well, and also Chainlink. So there are a lot of coins right now that are parabolically moving to the upside. And once again, I have no financial advisor, but what I will say to myself is that I'm often not a rally breakout trader, which means I'm not a fan of just playing breakouts in general, or even going long. I'd rather miss a long opportunity. This way I can carefully plan for my short position. And that's more of a trader that I am, as you guys all know. I'm more of a bear market trader, and that's what I specialize in for the trend. I've always had this FOMO of it going up. And as you see it go up, there's many different ways to play as a trader, right? Some people are very risky, where they're trying to time a very good entry so they can maximize their risk to reward by getting the best possible entry near top or bottom. And it's not to say that it's for everybody. Some other traders will look for more confirmation and for more confluent reasons to enter a trade. Think of yourself as any athlete or a basketball player, for example, or a hockey player. You're going to have tons of skills, hundreds of skills. But sometimes things are better utilized in other certain situations than others. And that's why we like to look for confluent reasons when entering a trade. And personally myself, I think you guys know where my aggressive side is, and I've owned up to a lot of my mistakes, and I know where my strengths are, and I know where I want to focus on for my weaknesses to be a more well-rounded athlete, we can say. So I'm a greedy trader, as you guys know. As you've seen me trade three years live, I love to catch falling knives. Without risk, there's no possibility of reward. Without massive risk, there's no possibility of massive reward. And I'm not saying that I'm catching a falling knife. Of course, I'm looking for confluent reasons to enter a trade, right? I like to maximize that RR ratio. This way I'm going to have the highest potential for a percentage gain. And other traders, they're going to wait for example on a breakout. They're going to miss that breakout, but they're going to look for a higher high and a higher low as well. And then they're going to perhaps enter on a certain Fibonacci retracement range while they're laddering to the downside, right? Assuming that it is an impulse wave going up, especially if it's parabolic, we can easily assume that there's most likely going to be another wave upwards. So just as an example, you're going to miss the wave 1. Wave 2 comes down. You know wave 1 is fairly hyperbolic. just based on the shape of it, right? We're talking about a convex kind of shape rather than a concave type of shape, where you get the function y is equal to e to the power of the x, right? So e to the power of x, that's where you get a parabolic function. And then people miss out on the first wave going to the upside. Just as an example, let me draw it out for you. Okay, you get a parabolic move to the upside, and then you're going down. And this parabolic move looks something like that, okay? Where it's just going something like that. That is a parabolic move upwards with a convex type of shape. Convex shapes are amazing. Here's a concave type of shape. Think of it like a cave, door, entrance. And a convex is the opposite of that. So once you see a parabolic move to the upside like that, you can easily assume that there will be an additional wave to the upside. And then what some of my friends do, the ones that used to day trade, they would look for a retracement on the downside where there was previous support, wherever the interim support previously was. And then they will ladder accordingly, for example, in a green box like that. That will be their range where they will be laddering, and then they don't have an overall RR yet, but they can take the average of it. And then as it goes down, they will add a little bit more to their position, but the key thing to do is perhaps look for this potential breakout. So for example, if you're getting an A, B, C, D, E type of correction, that's happening in the wave 2, which is absolutely possible, in the form of an ascending type of triangle, like that, right? Do you understand? A, B, C, D, E. Okay? Like that. And now you're getting an ascending type of triangle. What you want to know always is where point 1 originally began. Now, if you make note of that, let's keep this white actually, or yellow. If you make point of right here, that's the breakout resistance, because that's where the previous high was. And then you're going to try to buy an A if you see a retracement range, and it doesn't, and then B doesn't break out, right? There's no point of adding to a position. Then you see C form. You might have missed this C, okay? Because then you know it's truncated because it's going closer to the upside. But it's not quite an impulse wave upwards yet, based on the volume and the telemetry of the way it is going upwards, or the geometry of it, rather. I know a lot of people always debate, you're drawing lines on a chart, they don't exist. I don't think those people have ever even once Googled or Wikipedia what technical analysis is. Technical analysis is here for a reason. We look for repeats in histories, and we observe patterns to try to predict future behavior in a chart. So then if you miss C right there, and you see it going for D, and it doesn't break through, then you automatically know that there could be an E right here. And that is where I would personally end up adding more to my position. Keep in mind, I'm not giving financial advice. I'm just teaching you guys lessons that I've accumulated under my belt with over probably 10,000 trades in my lifetime over 3 years, as you guys have seen. Okay, maybe not 10,000, I'd say 5,000 trades. How about that? And 3 years of full-time experience, and studying for about 18 hours a day, or 16 to 18 hours a day for a year and a half in my mom's basement. Look how far we've come, huh? 3-4 years ago. And then you see E form right here, bam! And then when it gets closer to this resistance right here, that's where you add more to your position. That's kind of what a conservative trader does. I just thought I'd share with you guys a little bit of experience and wisdom, as I always do, because my channel is ultimately reserved to help people learn and grow and develop skills, and perhaps be able to read different types of newspaper publications to not always be biased, so you can have different opinions, right? If you're only reading one newspaper, then you probably don't have all the information. But if you're observing from many different perspectives and you're taking it all in, that's how you're going to learn how to develop yourself as a trader, and also eventually come up with your own style of trading. You simply can't just be like, I want to play basketball like Michael Jordan, you know, or something like that. Maybe he'll be an idol that you'll look up to, but everyone will always have different skills as an athlete, right? And we always want to focus on being who we are, where the style of trading will eventually mold to our personality of accepting risk, how greedy we are, right? And it's all about greed and fear. Personally myself, as you guys know, I have balls of steel. And that is a fact when I trade. It requires a lot of emotional stability to be able to trade in a very aggressive manner, because when you see it swing plus or minus large R units that you've allocated, you know for a fact that you need to have the balls of steel to stick by your risk to reward structure. Otherwise, you will not succeed. It is the discipline that you carry that will always make you get to the next level. It's not more so learning a skill, like I know how to use Fibonacci extension or retracement or Elliott Wave. It is more so how well you can stick to your risk to reward formula and how disciplined you are to not falter away from the original plan. You must have a plan before you enter a trade. You must have confluent reasons. You must be able to see every single angle from left to right, from 12 o'clock to 3 o'clock to 6 o'clock to 9 o'clock for exit strategies of how to shed if you are in a bad trade. You can never ever say to yourself, this is my RR, this is my stop loss, it has exceeded my stop loss already by a few percentages, but I'm just going to hold and wait to see what happens. That right there is a key success for failure, because you cannot adhere to your original strategy and the discipline is not there. We use risk to reward formulas and we trade like a casino simply because we understand that we want to win over time. It is not the individual trade that you make that will make you successful as a trader. It is going to be the marathon that you run over 100 trades. As long as, let's say, you're 50-50, even if you won 50... Okay, you know what, guys? You guys haven't seen this in a long time. I put my girlfriend to sleep. She's just watching a movie behind me right now, and every time I notice how my voice just changed all of a sudden, because whenever I start working, she says I have like kind of a calming, whatever, like narrating voice, or you know, journalism type, whatever, and it just soothes her to sleep like a baby. Anyways, so you know what? I'm actually too lazy now to do this. Like, you know what? I'm gonna do this for you anyways, okay? I'm gonna do this math in my head for you guys. My tone just completely shifted now because my attention shifted there for a minute, if you've noticed. Okay, let me see if I can snap back into this, okay? Roll a dice 10 times. Or not a dice. Heads or tails 10 times. Alright, so we're gonna roll. We're gonna flip heads or tails, okay? Flip a coin, heads or tails 10 times. I'm just gonna show you guys a crazy example if you haven't seen it before. Alright, so let's say that you flip the coin, heads or tails 10 times. Obviously there's a 50-50% chance for heads, 50% chance for tails, okay? That's fact. Now, let's say that this is referring to trading, where you win only, actually 40% of the time, okay? 40% of the time. But every time you win, you actually win, for example, okay, each win yields, we'll say, $20. Each loss, I'll just make it like this, equals $10. A little bit easier to do that way, right? Okay, this would be known as an RR. RR 2-to-1. Meaning, you would win twice as much as you would lose. So each time you win $20, and each time you lose $10 only. So that's an RR as 2-to-1. Let's say you win only 40% of the time. That means that 4 wins at $20 each equals $80, right? And then you lose 6 losses at $10 each is equal to 60. So the net profit is actually 80 minus $80 minus $60 equals a $20 net profit, right? Does that make sense? So even though you lose 60% of the time and you win only 40% of the time, as long as you're choosing good risk to reward setups, you can actually still be very profitable over time. And that's what I'm referring to, okay? So anyways, we should probably get into this technical analysis video now, shall we? Ethereum is on a rampage right now, but what we must acknowledge is this specific resistance zone right there. It is scary, and it ranges up to $289 and exactly in between where we are at right now already. So we're looking at 283 to 289, okay? $283 to $289 is where this is most likely a resistance zone. So I am absolutely looking for a short position. I do have to admit that, and I will not lie in any way. I've missed out on this rally, which has been beautiful thus far. I should have got in around the 270 ranges. I did not expect it to peak this high, but now we can identify that this particular region is of a lot of contention. Okay? So now the question is, how high are we going to go, and what is our actual count? Okay? In my personal opinion, this is the count. Either that's wave 1, or it starts from here, or even there. Either way, this is wave 1, no doubt in my mind. And now we are hunting for a wave 3, which I do not see it exceeding $289. And then eventually, if this is an impulse wave that does end up going up very high, we will be looking at this particular resistance right here. If you go to the weekly, you end up seeing the best results for resistance, which is pretty much the 4 wicks above the bodies of these candles between June 17 and also July 15th, about for 4 weeks, okay? For 4 weeks, if you look at the open, that would be 269 about. The close here, actually this would be the, open, the close 290. Like, look over here, okay guys, the open, actually no, this would be the close. Yeah, okay, it's actually 308. So opened here, closed at 308, and then it opened there at 308, and then closed there, and then opened there, and it closed at 306, and then it opened here at 306, around there. So we can easily say and guess that the next resistance area is between 306 to 308, right around that particular region. The weekly is still on a tear right now to the upside, but for us day traders, we are always looking for short-term volatility that can yield a small percentage gain, and we do not care what happens next week or even tomorrow a lot of the times, because we are day traders, not swing traders. The daily, sometimes day traders think that they can hold their position and become a swing trader. It doesn't work like that. Make sure you always stick to your RR. If you take a look right here at the daily RSI, you are seeing it now about 90, 89 to 90 range. We are parabolically moving to the upside with the histograms peaking up at a very steady rate. On the 4 hour is my favorite, because now we're looking for this particular type of pattern that will signal to me a short-term short. And it goes something like this, okay? I always start off by drawing the red by extending it. So the way that I would see this is like this in particular. Okay, and then this one crossed over, went back up already. So now I'm expecting for this to maybe do something like that eventually, where I am looking for the second crossover that's going to signal a short position for me. Right there. Okay, So we are very close to here. For a possible short, we take a look at the 4 hour and we look at these particular regions that I will show you vertically right here, and now the one coming up right here as well. Okay, higher high than that, yes. Lower high than that signals what? That's right, bearish divergence if you said it. Okay, so now we extend based on what we know, and we can easily deduce that this particular region for RSI is most likely going to be the turning point for it to come down right here. As we use this slope right here as a resistance, we can assume that there's a good chance of it getting right to that resistance and then perhaps dropping. Okay, so we are seeing signs of bearish divergence right now, and these signs of bearish divergence are fairly scary. But that's only on the 4 hour. Alright, keep in mind. So if we go to a lower time frame right now, we have to ask ourselves, if this is the third wave going to the upside, then what the heck? Okay, if it goes something like this, which clearly I am demonstrating that it is, then therefore this must be the first wave going to the upside. Doing a trend-based fib extension, we confirm that wave 3 is indeed higher. Okay, so if we're counting this as wave 1, 2, 3, we see it higher than a 1-to-1, 4, and now the 5th wave is the one that we are questioning the most. It is either a 5th wave extension within the 3rd subwave, or perhaps it is a 5th wave ending diagonal within the 3rd subwave. Does that make sense? Let me say it again. It is either an extending or an extended 5th wave that is found in the 3rd subwave, or it is an ending 5th wave diagonal that's found, of course, in the 5th subwave of this 3rd particular wave. Okay, that makes sense? It's almost like a tongue twister. You gotta go a little bit slow sometimes. You gotta ease into it. You know what I'm saying? It's just how it is. I gotta get some more fire in the firewood. I'll be right back, guys.
Is the heater on?
Pardon?
It's hot here. Is the heater on?
You hot?
Yeah, it's hot.
I'll turn on the heat for you, okay, babe?
I don't want it on.
Yeah, I'll turn it off.
Okay.
I'm not editing this video, by the way. It's filming still, just so you know.
Right now?
Yeah.
What? My short?
Yeah. Alright, everybody. Sorry about that. I had to take a 5-minute break there to get the fire going, and I had to turn off the heat. I don't have a thermostat in this old cabin. It's one of those knobs on the electric baseboard heaters. This place is not well insulated whatsoever. It got down to about minus 30 in the past 2 days, and I was freezing. Had to chase that cat Kingsley around just for body heat, and we were both using each other for a lot of body heat, me and that cat. It was either that or cooking it, you know, if I starved and there was a snowstorm, but that's not going to happen. So anyways, let's get back into this technical analysis with a little tongue twister of mine one more time. This is either an extended 5th wave that is found in the 3rd wave, greater degree wave to the upside, or this is an ending 5th wave diagonal that's found in this 3rd larger degree wave. Does that make sense? And yeah, that is possible in the 3rd wave. Those that want to dispute it, let me know if I'm wrong. I always like to catch myself making mistakes when it comes to this kind of stuff. So if this is the first wave going to the upside, then we can easily say this, okay? Check this out. This is a 2618 hit using a Fibonacci extension from here to there to there. Very, very, very bullish. Okay? Because it's very bullish like this with little retracement to the upside for each particular wave, then what that means is it is a parabolic function going up, okay? So we see it barely correct here. If that is even the first wave, if it was there, that would be at 382, okay? If this is the next wave to the upside, barely a 382 touch, and here could be the first subwave, and that is exactly what we are trying to deduce right now. Always keep in mind that the RSI as it stands is well over 85. It's actually at 89 right now. Not only that, do you see this right here? It is concaving up, and when I say concaving up, we take a look at this particular function, or sorry, convexing upwards, okay? Where, you know, if I'm drawing a Cartesian graph, where this is the y-axis, and this is the x-axis, okay? And then this right here is a function that is parabolic, which means it is y that equals to e to the power of x. So it looks beautiful when it goes up. But what goes up like that, fast, will eventually go down fast as well. So if we get a function like this that goes up, well, then y to the power of y is equal to e to the power of negative x is the parabolic move to the downside, right? Which is that right there. So when we think of it from that perspective, all that I'm trying to say is that what goes up heavily must go down. If you run for a long period of time, you need to take a break. If you've just had a marathon, you're going to need rest before you can either go up or down, right? But usually after something that goes really strong and hard like this, we'd be very hard pressed to see it just go sideways for a little bit. We're more likely to see it be exhausted, and there's a huge battle between the bulls and the bears. If we actually take a look at here, which I will bring to the other screen here for you, we take a look at the Ethereum USD long versus the short table on a daily time frame, for example, so we can get an overall bird's eye view of everything happening in the market. What we see is that it has been skyrocketing on the short table, and then now we see the long table actually being liquidated. So we always have to be very wary of this, simply because the bulls could be using the shorts for fuel to add fire on any exchange that you can short. If I were a bull and I had $29 gazillion, I would probably end up using the short table as fuel as well, because you have to force them to close their short positions by going long, right? So they have to buy, which turns these bears into a bull. So the comparison is that the short table has been absolutely going higher right now. So the question is, what do we do? So my personal plan right now is to acknowledge this specific resistance between 283, or right now rather 282 to 289. That's a very large resistance going to the upside, okay? And if also I am correct about this fifth wave diagonal that is forming right over here, then I would say that we are very, very much so close to being done this wave. And but we have to make sure that if I am correct right here with this specific assumption, that wave 3 is not the shortest, and wave 1 is indeed shorter than wave 1. Wave 1 is indeed, that's right, shorter than wave 3, I meant to say, or wave 3 is longer than wave 1. Either way, because we know for a fact that wave 5 is probably the strongest one right now, since it could be doing an extended fifth wave or also an ending fifth wave diagonal. So then we do a check, simple methodology, right, of just checking in general. If that is actually the first wave right there, that's very little retracement. And we easily see already that wave 3 has exceeded a 1-to-1 extension when we go waves Fibonacci extension from 0 point origin here to 1 to 2. Therefore, check. We're in good place right now, in good standing. And then we also say, right, if that is actually wave 1 right here and my Fibonacci extension is at the right place, then we see that 289 at 2618 is indeed a very scary number, which also coincides with this right here. with our resistances of where we are right now. Therefore, it is in my belief that we will eventually be bearish for Ethereum, and we are just looking to finish this specific fifth wave going to the upside. And in my opinion, this is going to drop right now, and then we're going to finish something just like this. Just like that, okay? Let me demarcate the region that we work in. As you know, I always like to identify the region that I am working in. And I think that we're going to make a really crappy fifth wave in here somehow. But the first wave could have been a misleading wave if this was even the wave. Go something like that. 4 and a tiny little fifth wave to the 289 region. And then we finally see the drop for mega short position that I could be entering. But for now, as it stands, if we are bullish, we will have to break 289. And if we do that, here you go, 300 plus. But if we are bearish, then my opinion would be we will drop anywhere between from 282 to 289. We're going to get a lot of bearish momentum, and we're going to end up dropping extremely hard. Okay? So, the moment that we don't break 289, or between 282 and 289, if we are stranded in that specific zone, then that would be considered bearishness for me if we can't break higher than it, and I would expect a retracement pretty low. I'm talking about to the $237 regions, but of course I'm going to just go round first and go for 250, okay, since that's a very strong psychological number. But if we break above 282 to 289, then I think that we're going to be shooting for a fairly good position. I'd probably say around on the weekly here, we could be shooting anywhere up to, wow, let's go to daily actually, it makes more sense. Probably say about 320-ish, 315, around that particular region. Anyways, that's all the time that I have to help you guys out today and to make a video. I hope you're all having a great day. And for those that are still interested, I've got about 2.5 weeks left of completing the videos and then editing it for the updated, revised versions of my course 1 and 2 that's no longer found on Udemy. Okay, pause here if you'd like to see the course 1 curriculum. In my personal opinion, it's probably one of the best ones out there because I've watched almost every other ones out there. I took all the bad and I made it better, and I took all the good and I improved that as well. Here's course 2. You're welcome to pause to take a look at the syllabus. And here's course 3. You're welcome to pause and take a look at the syllabus. So this goes for only 190 American USD by crypto, which you can take a look in the description below here on YouTube. Just send it, show the screenshot, and I'll give you a download link for all 3 of them. Alright? And then, once the updated ones come out, which will be in about 3 weeks, I'm sure of it, you guys are going to have access to it for free. But, if you don't get it before I finish these courses and release them, you're never going to have access to it unless you want to pay a premium, because I'm only going to allow 100 copies of these out at a much higher price. Why? Because I think it's worth that much, not to just myself, but to a lot of people, since the material is top notch. It's very educational with live examples. It's not the way to do it, or the only way, but it's going to add to your repertoire of knowledge. So I highly encourage you to get it if you haven't already, because if you don't, you're either going to pay a lot more for it, or you're simply just not going to be able to get it at all because of scarcity. It's just how it is. So anyways, have a great night. Happy Valentine's Day, everybody. I hope you're spending it with your loved ones. But just to be clear, you don't need a commercial day that was made by Hallmark because of clever marketing to show the people you love them, right? All that matters is that you show it every single day in small different ways. And I think that's a lot more important than needing a commercial day to celebrate your love or profess it. You know, well, I'm going to go off on a little tangent right now about the De Beers company that monopolized all the mines for diamonds in the world and bought out every single company or killed people just to monopolize it. And do you know that diamonds are actually not that common, and the majority of them found are actually locked away in a vault, and only a specific amount of diamonds are allowed to be released into the world each year. And diamonds are generally owned by a single mining company that has a huge monopoly of this in the world. And through clever marketing. Have you guys ever heard of the Beers Company? Well, they invented the slogan, "A diamond is forever," where a man should be investing 3 months of his salary just to show somebody they love them through a diamond that is not even rare, because it's owned by a monopoly, one company, one conglomeration, all kept in a safe, released in a very trickled amount each year to create fake scarcity. To me, that's just not cool. I don't support any type of capitalization or commercialization like that. It's no different than pharmaceutical companies to me. So if I ever got engaged, I think it's going to be something very, very, very special that I do that nobody could top. Because it's just in my nature. A stupid, hopeless romantic. But that's okay. I'm happy with who I am. And I always will be. Because I don't think that you need to buy anything, in my personal opinion, just to show it. Although Gary Chapman does say the 5 languages of love, okay? If you don't know the 5 languages of love. 1, it is through physical touch. 2, it is words of affection. 3, it is gifts. 4, servitude of time, like doing something for someone. And 5, it's just quality time. Gary Chapman says that you can only show love or feel love in 2 of those ways. And I'm not really too compatible with someone that likes to feel love based off of gifts. It's just not me. Anyways, going off on a little bit of a tangent now, like I always do. I hope you have an amazing night, and thank you very much for always watching my videos. I appreciate it. Have yourselves a wonderful evening, and especially a wonderful weekend with your loved one. Bye now.